Good morning, everyone. Welcome to this live intraday strategy webinar. Today is Wednesday, February 8th. Michael Boutros here with you this morning. Alan, Mark, Pete, Pooja, Sarab, Adrian, great to see you guys this morning. So, on the docket for today, obviously we'll talk about the dollar index. Essentially, I don't want to spend too much time on it. It's exactly where we were yesterday in the webinar in that it still could stretch a little higher into structural resistance. We made some progress on that in overnight trade, but still failed to actually tag that upper parallel. I don't know if we'll actually get the tag, but same idea remains, okay? Look for a near-term exhaustion into that high for a pullback, inevitably to get long. We'll go over that intraday chart in just a moment. Obviously, we want to cover the Kiwi crosses, Kiwi dollar, Kiwi CAD, also on tap. For tonight's RBNZ interest rate decision and the implications for that. Dollar CAD and crude finally turning over, making some progress there. And obviously we'll go over the dollar crosses. So euro coming in some interesting support. Dollar yen not quite there yet. I have adjusted that support target, guys, that we were talking about all week long, just a little bit lower into 111 upon a second look at the chart. So we'll look at that as well. And then all the yen crosses, Aussie yen, sterling yen, and euro yen, all from the Sunday update coming into major key areas of support. As always, feel free to stop me at any time with questions, trade setups you want to review. If there are no objections, we will jump right in. All right. Here's what the U.S. dollar looks like heading into the open. Graham, dollar CAD's on there. That's up right after Kiwi CAD. So, Japanese yen, actually strongest performer here, fueling more downside on that yen, on the yen crosses that we covered on Sunday. So 0.36, percent gain for the Japanese yen versus the US dollar. Biggest loser on this session is the euro, down 0.15%. Now that brings euro dollar into a very interesting support target. So we'll talk about that as well. I don't want to initiate any new shorts on euro. I'm frustrated. I'm not currently holding a short euro, guys. I was in a euro short earlier yesterday. I brought the stop back to break even way too quick. It literally took me right out and then dropped. Luckily, I'm still holding that Kiwi short that we talked about from yesterday. Did take off 20 there. Looking for the rest of that trade. That's also at break even. So if we get another spike higher on RBNZ, depending on where that high is, might be another opportunity. So we'll take a look at that as well. Okay, here's what the DXY looked like last night. So, dollar index, same slope that we've been following for the last couple weeks. We had a 99.79 bullish invalidation level. Again, looking for a final stretch near 100 spot 72. We already got that tag, but the upper parallel comes just higher. And a 101 breach is what's needed to validate a full-on reversal. Okay, that would need or necessitate a break of the upper parallel of the initial range highs for the week, for the month. It would be sort of a nice break target for us to start looking a little bit more aggressively on the upside. Till that happens, I do think you're at risk for near-term exhaustion. Here's what it looks like now. Okay, so there's that 120-minute chart. You saw a little pullback in trade, basically held at 50 line, and then we made that other high that I was looking for, failed again, and here's the pullback. This is basically a near-term consolidation. If it breaks to the upside, like I said, the 101 level break is what would fuel, in my opinion, a little bit more of an upside play. But watch this near-term resistance here. There's really not much U.S. data until you head into Friday, the University of Michigan confidence report. Other than that, obviously, with this index, you'll be looking for the euro to really drive stuff. And with the euro at near-term support, a near-term rebound there could really fuel the downside. So to get excited to play the short, even on a near-term scalp in the dollar index, you need to get back below 100. Specifically one spot 13, this spot right here. 50% retracement at this range, not so much there, but it's been a very nice pivot in price. And the 50 lines there as well, which if you shift this down just a little bit, you can see that parallel caught the highs pretty well. So it necessitated a break below that as well. But the long and short of it is look for a possible stretch higher, but largely looking for exhaustion into a move lower. Now, once we get that turn, tack on a quick retracement. Initially, you'll be looking for a move back towards the median line, obviously. But if this is or does materialize to be the high, if you tack on a retracement, look where the 618 comes in. Right in line with those former swing lows. So the levels all line up real well, as far as the dollar index is concerned. And helps our bias here as it pertains to euro dollar. Dollar CAD we'll talk about in a moment. That came in some nice resistance, I think, or is approaching it. But for the driver of the index, specifically with the weighted average, almost 60% weighted the euro being as support is the biggest compelling driver here for a correction lower near term in dollar index. All right, any questions on this? That's number one. Number two, Kiwi dollar. Heading into the RBNZ interest rate decision, here's what Kiwi looked like last night. So ahead of the Kiwi interest rate decision, a couple things I do want to say. Look, Wheeler is known to jawbone real hard as far as currency markets are concerned. He's going to be leaving in September, so do keep that in mind. We haven't, not really sure what the replacement is as of yet, but you know, we'll be looking to see what the language suggests. We got CPI a tad stronger in the third quarter in New Zealand, but wage and job growth slowed. So one offsets the other. And if you look at interest rate expectations as they stand right now from the RBNZ, okay, the first real probability, material probability of a hike doesn't come until November of this year. Okay, everything else is just noise. Really no high percentages here that we'll see any type of move until we get into November of this year. So the expectations are minimal. Can he really shift in such a way that you'd see that expectation really materialize? I don't think so. If anything, he might soften that hawkish tone. Keep in mind that he's one to always keep an eye on the FX markets, and he's very vocal when he suggests or believes that the Kiwi's in an overvaluation mode or play or whatever. So look for commentary on that. Long story short, the technical setup is this. Okay, we basically made an outside day reversal off resistance yesterday. That's a bearish development when it happens at technical resistance. And while we've been really wondering and fighting this over the last couple of days, the validation for the reversal isn't quite there yet. Look at this. This is the daily chart, again, from a closed basis. We are all over the place. It's not clean at all. Is this a break of resistance, check as support? I don't know. All I do know is that you're seeing momentum really faltering, making a series of lower highs as price action makes a series of higher highs. So you're getting waning momentum. You're not really getting that breach of resistance and run. And in fact, when you did get that breach of resistance yesterday, you reversed right off this 764 retracement. It's a long-term retracement from the highs that you made back in, what was that, April of 2015. You spiked right into it and then reversed right back to close lower on the session. So there is both, you can make an argument on both sides in that the reversal off the highs is specifically, from a price action standpoint is bearish, but the reversal held support, and that can be interpreted as bullish. So what does that mean, Mike? You're all over the place. Well, price action is too. So long and short of it, we're right, no change to any of the levels. I'm still holding that short from yesterday. Like I said, I'll probably get taken out at break even. I'm about 9 pips up at this point. Here's what that trade looks like. Really nice entry yesterday. We caught on the rebound in U.S. trade. Again, quarter daily TRs was 19 pips. It's now moved up to 20. So we booked that, left the rest on the trade. I was looking for a move here. My limit's at 72.66. My stop is at break even. So if it does move higher into U.S. trade, look for resistance back into the former parallels, back into that upper parallel. 73.50 is still the broader bearish invalidation level. If we get above that, that's not only last week's high, but it's that a near-term 786 retracement and the upper parallel. So this is the level that would turn me bullish. I don't need to wait for the highs on this one. That being said, we're testing the monthly open. You know, you could be at resistance right here again. Here's what it looked like yesterday. Here's what the 60-minute looks like. You know, on its face value, guys, one thing you also want to keep in mind here for Kiwi is that it's just simply made its weekly opening range. Here's your Sunday open. You made a low, tested a high on Tuesday, tested the low, held, failure, held, failure. Look for this consolidation break near term. I'm favoring a downside break targeting 72.54. My limit's at 72.60 and change to account for this slope. And then a subsequent downside break, you're basically looking for this range into 72, just ahead of it. Let me snap that line for you. Just ahead of it, you have some parallels here. Let me zoom this out to a 4-hour chart. So here's the median line off the lows. Swing high in price. And the 618 line of the descending pattern. All converge right here. 72, let's call it in 72.10. So the levels are clean. Let's see if we can't get some steam to get this thing going lower, okay, on Kiwi dollar. Again, we have RBNZ on tap. If Wheeler does charge some sort of rally or some sort of exhaustion push higher, if 73.50 gives out, you know, again, I'll bail on this trade. Or on the bias. I'm already at break even. Questions on Kiwi dollar heading into the RBNZ? I haven't deleted my Kiwi dollar charts yet. Same trade as you. Portion still open, waiting. All right, Pooja. Let's see if we can't get it going. I was thinking of you when I was taking that yesterday. I mean, the ideal entry was, it was a good play on the entry. This pullback here on the upside, we basically need to hold the high we just made. If that holds, well, first of all, my break even is just higher, but if it holds, that's a very good sort of technical play to the downside. Interestingly enough, Pooja, the Aussie yen rally that we saw last night peaked exactly at that median line again. It was disgusting. We'll go over that in a moment. Any questions here on Kiwi before we move off? Looking for resistance. I'm liking another move here to the downside, inevitably looking for 72.50. Pooja says, looks like another triangle on the 5-minute chart. Yeah, could be a triangle, in which case it looks like you actually, whoops. In which case it looks like you actually just broke. But I wouldn't put too much emphasis on it. Momentum is still pretty bearish. In fact, you're getting some nice divergence here on these last highs. Price action, oscillator, 5-minute chart. Not much divergence there. Broadly, you're seeing some divergence on the 1-minute chart. So wouldn't be too surprised to see exhaustion on another run higher here. Okay, moving right along. That was Kiwi dollar. Number 3, another Kiwi trade that we can keep our eyes on heading into the RBNZ interest rate decision is Kiwi CAD. I know it's a weird pair, but we've actually talked about it a lot, if you guys remember. This slope is still the same one that we've been looking at since last month. Now, what I wanted to highlight yesterday, lose my train of thought here, was this. Key resistance and real critical resistance. And I didn't want to just straight up jump in and say go short, guys, but it was the trade to do. Literally as I was writing this last night. 96.48, 96.49, 618 retracement of decline off the highs that you made from November. You also have key slope, a beautiful slope. Now I know it got messy here, and the last time that we covered this pair was actually, if I'm not mistaken, it was like December, mid-December. We were talking about looking for a downside bias into 92.60 or so, that 200-day moving average. It dribbled lower, and early in this year we even broke below, okay, but the pivot back above shifted the focus back higher, and specifically with the break above the 2016 open. These slope lines that you see here in red are simply derived by just these 2 reference points. That's it. A parallel extending off the lows from March of last year gave you resistance, resistance, break, support, 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 break, resistance, resistance, converges on the 618 retracement. Add to that this slope, which hasn't really been that fruitful. Let's be honest. The median line, it's been decent, but, you know, not really the cleanest thing. In fact, the only thing that was I was looking at, if I'm not mistaken, was the 618 line, and that caught the lows there. But largely speaking, hasn't been all that, you know, super clean. Well, the upper median line parallel converges on that same region. So now you have three confluences of key technical things that you want to just keep in mind. So the risk is to the downside. Add to that, you're looking at divergence in momentum. Price action making a higher high, the oscillator making a lower high. And these subtle divergences are the ones that you want to pay attention to. So the risk still remains lower while below 96.50, in my opinion. You don't want to get aggressive. It is a counter trend trade. Okay, you are simply at downtrend resistance and uptrend resistance. So if you're gonna get a kickback, this is where you'd want to see it. Now, with what Aussie dollar has been doing, or excuse me, what dollar CAD's been doing lately, I don't want to get aggressive. Okay, because you're essentially taking a long stance on the CAD. But certainly the risk is there while below 96.50. On a topside break, you're pretty clear as far as the targets are concerned. 97.11 is a soft target. 97.70 is the high day close from last year. That'll be a significant target. But from a slope standpoint, you're pretty free. You're pretty scot-free till for a ways to go. As far as support, initial support, I'd start to look at the monthly open. Okay. Key support and bullish invalidation, the broader trade stays constructive above 94.22. That's the daily chart. Here's the 4-hour look like as we were squeezing up into that key region of resistance. Here's the 60, and here's what it looks like now. Hey, Pooja, you're more than welcome. So, 96.50 is still the near-term bearish invalidation. You want to stay, bearish while below that that level. Again, 96.85 is what I noted yesterday. That's also a region of resistance for exhaustion. So if you get, and again, I give you these levels, guys, specifically when we're heading into major event risk, because if there is some sort of spike and the market reacts to some sort of comment, I want to know what level I should be looking at. You know, if it does invalidate near-term resistance, which is right here, obviously. And that would be the upper parallel. So watch that region into the RBNZ. It's actually not after the New York close today, guys. I was mistaken. I think I wrote that in the report. It is at 3 p.m. Eastern, so an hour ahead of the U.S. New York close. RBNZ interest rate decision. Okay, immediate support on a near term, look for 95.64. Okay, you have the actual median line right there, which has been a nice pivot. Support, support, break, resistance, break, or resistance rather, resistance, break, should be some support, converges on the 50% retracement in 95.60. So yeah, Kiwi CAD, also another one that's on the menu as we head into the RBNZ. Any questions on this one? It's counter trend, so be cautious or use lower leverage on the short side here, but I think you can get a little bit of a playback from a scalping standpoint. Again, ultimately it moved into the weekly open, the lower parallel, which caught these two lows. I'd be looking for re-entry back on the long side. Ultimately, guys, we do want to see this formation break. But near term, I think the risk is still there for the pullback. Any questions on Kiwi CAD? That's number 3. All right, I'm going to pick up the pace a little bit here so we can get into the juicy stuff. Dollar CAD and Groot is next. Here's what Dollar CAD looks like. Where is Dollar CAD? There you are. Right. So Dollar CAD looked like this last night. Okay. We were noting that 132 handle, 132.09 to be exact, was a 38.2 retracement. It wasn't really as compelling on the daily chart as much as it was on the near-term charts of possible resistance there. It also ended up being an exact like 618 extension off the lows right there at 132. Excuse me, a 1618 extension from the advance. So you had that, and then you had the basic 38.2 retracement of the entire decline off the highs from December. So upon a second look, it gave us a little bit more of a hold up. Before we start targeting former key support as resistance, maybe you might get some kickback from here. And I think that's what you're getting now. Larger story picture hadn't changed for me. I'm still looking for 31.18, 31.20 for soft support. You're basically looking at the lower parallel. Again, you don't want to give this formation too much credence, but the median line has offered resistance, break, charged a rally, pulled back into support. Once it broke, charged a decline. Lower parallel converges on the 38.2 right there at 31.19. So, what does that mean for crude? I came in today and it was funny because obviously crude took a big spill and everyone had their hands up in the air. And when I got into the desk today, the first thing the guys said was, well, look what's happening in crude. Crude's showing a little bit of a rebound. You've been so bearish. Well, dollar CAD's at resistance. Crude's at near-term support. Why is that weird? Just because the market broke and went in that direction doesn't mean it's going to be a straight shot to hell. So we got to curb our expectations, and specifically when we're waiting for something for so long and it finally starts to materialize. Everyone gets all excited, but I don't think you want to start looking for this to collapse yet in dollar CAD. I still think you look at 31.20 for support, 30.90 on a stretch if you get some sort of event risk on crude inventories, which comes out later today. But largely, I'm looking for some support down here into the 131 handle, 130.90 level. A breach above 132. Near term, look at 132.27 as a soft target as well. That's really the region that you need to get through. I'm still thinking 32.50 is a big, big level. Former swing highs, former trendline support, now resistance, former lower median line parallel. It's stacked up there. But near term, look for that setback to get a little bit deeper. Also keep in mind, guys, that this pullback would also be moving into the 200-day moving average, which currently comes in just ahead of the 130, 120 level, right around 130, 134, or 130, 130 here. So either way you slice it, looking for exhaustion just a little bit lower. In fact, why don't we just take a quick extension? Bear with me one moment and see what this looks like. Okay, so 100 off the high, just real near term, actually puts this thing more or less in line with the 200-day moving average that we just noted. So keep that just for now, and let me just take a quick gander. Hey, look at that lower parallel comes in. Could be the operative play here. This is the, let's see what the 30-minute looks like. A little cleaner there. Tighten it up, tighten it up. Yeah, okay, we'll stick with this. So we'll see how that pans out moving forward. Speaking of open prices, have you noticed any difference between an open on a daily chart and an open on intraday chart? Daily chart uses 5 p.m. New York open, while the intraday uses 12 a.m. date change. Which one do you use? Pooja, I use the one on the daily chart, and I have noticed that, yeah. Especially if you're not using, especially on, let me take a step back. Depending on the feed you're using, so if you use the IDC feed, so for example, for sterling prices, because we had to go back, once we made that low, we had to go back to the 1980s to see prices back then. You know, the FXCM feed doesn't go back that far, so I've been using IDC. That one, the closing price is at 6 p.m. So they're all, it's something to pay attention to, but Puja, I always use the daily chart when I'm looking to ascertain daily open and close prices. Even on a weekly basis, don't use the intraday, use the daily chart. Okay, any questions on dollar CAD? So possible softness here. I don't want to get too excited on the long side. 31.40 and 31.20, both areas of interest for exhaustion, possible entries on the long side again. A 32 break would give you 32.27, and then 32.50 is major areas of resistance and targets on the upside. Crude looks like this. Interestingly enough, that was number 4. Crude is going to be number 5. Here's what crude prices look like. I know you all have seen this chart because we were talking about it. A little ahead of schedule. Conwall, are you in the room? A little ahead of schedule here, but we're at support. Okay, near-term support 51.50, 51.47. This is why, again, for dollar CAD, could see a little bit of a reaction near-term on a near-term rebound here in crude. Ultimately, I still do think you break lower. Crude prices on the weekly chart. I know you've all seen this one too. Actually, I'm sorry, this is monthly. But check it out. Looks pretty darn good to me. Look for the range lows of the months of the year and month, I guess, so far. Actually, no, this would be the year. The range lows come in at 50.69. Okay, a break below that is really what would fuel, I think, a little bit more of a longer-term correctionary stance here on U.S. oil. But for certain, finally starting to get that play. You know, we've been talking about this for a while. I've been feeling like an idiot because no one really liked the downside of crude. But here we are. It's finally starting to fuel. Also note that it was some beautiful divergence. Again, these subtle divergence signals typically for me are my favorite ones. A slightly higher high in price on a closed basis, slightly lower high on the oscillator. You know, these are the ones that usually go under the radar but typically fuel some nice moves. So, and that's weekly. So obviously we can't ascertain anything on this until the weekly candle closes. But you know, the peaks are in. So with that, crude prices, look for a break below 51.50, 51.47 to fuel the next downside move. In the event of that play, 100% extension takes into 49.70. 49.93 is a former swing low. So this is the first zone, as it were, for prices if we see you know, that push sub 51.47. Also, let me just see if there's any structure to this. Okay, I don't want to go crazy with it, but we'll stick with this for now. Highlights near-term support on the break right there along the median line, and that comes in basically into trade tomorrow, or into the end of the week on the 10th. And it would highlight near-term bearish invalidation. The weekly open is what I would use typically, but now that we're down here, $52.75 is what I'd be using. The monthly open and the 50% retracement confluence. That's what I'd be using as near-term bearish invalidation as far as this near-term move to the downside. In crude. What's the target sub 50 for crude? So sub 50, you mean 51.47 on this break? It's right here. Or do you mean below this? It'd be 48. So this would actually complete Sarub. Let me just make sure that this is priced properly. Hold on. Oh crap. 236 comes in there too off the highs. There's a lot here. This might actually fuel a bigger bounce, guys. That's a big confluence region now. You have three fibs that are all lining up alongside basic trendline support, and you're seeing the initial move already. So if you see a topside breach here in momentum back above 30 on this is a 4-hour chart. We'll bring it in. Let's bring it to an hourly. Yeah, you're already back above overbought. You're at risk for a rebound while above this near-term support at 51.40. But to get back to what you were saying, yeah, everything's represented already. So yeah, I would say a downside break, you're looking at 49.80, Sarub, into 49.93. Okay? And beyond that, scratch this level. You're basically looking for the 50. 48.70. Okay? Just keep in mind, excuse me again, here's what the daily chart looks like. Big region. Big, 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 big inflection region. You got the momentum divergence into those highs. You got the trigger break finally yesterday. So all the things are sort of lining up. The immediate downside bias is at risk, though. You want to wait for a near-term rally to get back on the short side. Stay bearish, sub the monthly open. Look for the break to the downside to target those subsequent targets at 49.90 and 48.70. Sarub, does that help? Does that make sense? You have crude inventories on tap later today into the U.S. Open, so keep that in mind. Hey, you're more than welcome. $10.30 is crude inventories. Okay, moving right along. Support for euro. On my notes, next is euro dollar. Here's what the euro looks like. And here's that support that we had highlighted earlier in the week. Okay, so this is the near-term slope support that we were looking for last week. Here's the update from February 2nd. That key support target was 106.42. We just tagged that in overnight trade. Really nice response to it. Again, you know, sort of lines up with the thesis of a near-term recovery, possibly in the dollar, giving this thing, or a near-term recovery rather in the euro, giving this thing a little bit of a pullback in the dollar off resistance, but really clean, really clean. And while I do think you possibly have some risk here for another dribble, largely I am looking for this thing to find some exhaustion here. So, well, before we do, 38.2 retracement, the advance off the lows, lower median line parallel for the current operative structure, right? That's the daily chart. Here's what it looks like intraday. 2 hour. So here's where we're trading right now. In time, it ended up being outside the realm of the lower parallel just because, obviously, we broke slope support. So if this break is legit, we'd look for resistance right around here on this rebound. And that's kind of the focus for me right now moving forward into the U.S. trade session. Are we going to hold below former median line support? If we are, you'd look for the subsequent break to tag one subsequent lower parallel would be the first target. That's basically the 106 handle, depending on where you are in time. And then you have these former swing lows here at 105.80. But the immediate focus for me now shifts on this region. And if this gives out, you're probably in for a larger recovery into key resistance at 107 again. But certainly, you're seeing some divergence in momentum on that move into the lows, into confluence support. I'd be a little concerned near term to get too aggressive on any type of short exposure. Or excuse me, long exposure from here, okay, as you come into this near-term resistance region. Here's what it looks like on the intraday. And I was stoking this out earlier on the 5. And I'm basically looking for some possible near-term exhaustion as we head into that median line right now. Momentum's been holding 70 on the 1-minute chart, so that's basically giving us some divergence on these highs, but it's currently a pretty constructive profile. So you don't really want to get too intense on these and try to fight it. As we always say, guys, trying to call a high is a fool's errand, but I think the near-term risk is still for a move higher into resistance exhaustion near 107. A lot is stacked up there. In fact, at this point, we can reassert some of these levels. That even highlights it even more. 107, 107.12. Yeah, I think you look euro. I think you look euro higher here into the U.S. Trade session. 107, 107.13 would be areas of which I'd start to look for some near-term exhaustion. Questions on euro dollar. Big support. Nice reaction. Okay, that's number 6. Number 7, dollar yen, and then the yen crosses. Here's where things are getting really interesting for me. So dollar yen, obviously, little bit of an adjustment to that level that we were looking at. 1180 was included for the last couple of days into 1145 as support. You did probe into it and actually saw a nice turn ahead of it. But a couple things to note. Based on what's going on in momentum, based on the initial reaction you got in the rebound in price, wasn't too convincing. And in fact, that's what made me shift the focus back towards the exact parallel, which actually lines up better with this swing high from May of last year and that 38.2. And that gives you a range of 1107 into 111.45. And that's, I think, a little bit more of a prudent region of resistance or support, rather, to look for. It also would include these swing lows that you made back in February of last year, the close low here from March. So big region and the lower parallel. So I haven't traded dollar yen. I'm not really a fan of dollar yen, but for those of you who are, look for near-term resistance heading into this key region. Here's what it looks like on the intraday chart. Questions on dollar yen? Probably see some more sideways to lower price action in this. I'm not really expecting much. Maybe Friday's Michigan numbers, or if we get my man Trump coming out with some weird commentary, a reaction, but largely I'm still looking for that dip into 111. Okay, sterling yen, the dragon as it's called. Here's what sterling yen's doing. I'm not involved in this one either. I wish I were, because I think this was like a gift entry right here. But in any event, the rebound still probably has another leg higher. I do think ultimately, let me take that back. I do think ultimately you do want to look for a pound move lower to get long again. One last move back into that lower parallel. This would complete a 618 extension from the decline off the highs. You have the January low day close, which has obviously been a decent pivot in price. And it would be a nice area of which you'd see a little bit more of a conviction, I think, or a better position to try to get back on the long side. That being said, Yesterday was almost an outside day reversal. I was stalking this really close. Didn't quite make it. Reversal off support nonetheless. So near term, the focus for me, or how to play this from a trading standpoint, I don't have anything from here. But from a trading standpoint, moving forward, I want to see this thing maintain a close above 139.60. Okay, that would necessitate, again, this region here to hold, which is basically the lows that we just made today. And a topside break of the objective weekly opening range is what would shift my focus higher. Till that happens, it's tough. All right, so possible interruption of the near-term downtrend here in sterling off the highs, but largely speaking, even if we were to get a dump lower, this is where I think our focus would shift back more heavily into sterling. The other yen crosses that are of interest is Aussie yen. I just wanted to highlight that this is kind of just dribbling. So Pooja, here's our trade. Do you see that median line? It's ridiculous. That's the second night in a row that we've seen price reverse precisely off that. So resistance, resistance, break gave you a run, support, break gave you a run, break gave you a run, support, resistance, resistance. Look for the consolidate. Same exact position we were in yesterday. So I guess you just hit pause, replay from yesterday's Aussie yen, and it's the same exact setup. No change. No change. If we're looking for proof and evidence that this break below the lower parallel is legit. And as long as we continue to hold below it as resistance, I don't want to get too excited about any long exposure. And with the same respect, the weekly opening range is intact. And we're looking for that fuel to the downside. Break below 85 would really solidify the reversal. Of all of the yen crosses, I think euro yen was the cleanest. Obviously because of the breadth and magnitude of the move. Still holding those shorts, says Pooja. I gotcha. Yeah, I mean, look, I wouldn't get too aggressive. Like I said, I wouldn't get too aggressive on it. I've already eaten like 3 break-evens on these, specifically on some of these Aussie crosses. Just hasn't really been panning out. But I keep my stop pretty tight against those highs from yesterday, if not at break-even. Just to be quite frank with you, look, if we break back above, let's call it 86 basically, we talked about this yesterday, you're probably going to see a test of the upper parallel. So obviously that's not the favored move. I favor a downside move, but it's kind of the scenario what would happen. Nope, we haven't done commodities yet. Conwall, great to see you. We'll definitely look at both of those. We did oil. It's the only one we have done already. But Aussie Euro yen is probably the best, not just because of the breadth of the magnitude of the drop, but because of just how clean the levels have been as far as what you want to be targeting. On Sunday's update, we said look for a move, a decisive move in Euro yen. I didn't think it was going to happen, like I said, this early, right on Sunday. But there's the break below the lower parallel, below basic 236 retracement. This is also a 618 extension from the decline off the highs. It was loaded. And certainly that break gave us a downside, clear downside bias below 121. So we've now taken out all the targets except this one. 119 is the final target I had for you guys on that report. That's 38.2 retracement. It's right here. I still think you could get it. The only thing I don't like is that you're getting some of that divergence starting to pan out to the lows. Now, this shouldn't shake you out of the trade if you're in, but certainly with euro dollar right at support and a very strong bounce off that support, mind you, I wouldn't be surprised if this thing starts to give a little bit of a relief rally. That said, still looking for a stretch down to 119 on euro yen. I would drop bearish invalidation at this point down to 120.54. Ideally, actually, let me adjust that. Ideally, it's right here at the median line. Okay, that's going to be variable on time. It converges on basic trendline resistance. It's really basic stuff. just ahead of that 121 level, 121.80 or 120.80, excuse me. And let me just throw this on the daily chart so you can get some perspective here. That's where we are. So you're basically looking for a reaction off this region. Stay bearish below the median line. All right. Questions on Euro Yen? Okay. One last thing I just want to touch at, because we did touch the CAD crosses, is Aussie CAD. And the only thing I wanted to highlight, guys, is that we're at big resistance yet again. That resistance level is right here at the 2016 open. Watch this. From a slope standpoint, it's been pretty dead on as far as major pivots in price. Again, the yearly open from last year. And it's also the high day close. Or excuse me, the high close for January. So if this thing is going to rip higher on an Aussie breakdown or a Aussie rally, if Aussie does max out, here's what Aussie dollar looks like. Not a really big fan of it, guys. I do think this is going to cut up more people. As I said yesterday, wake me up at 75.80 or if we head into 77.35. Other than that, you know, this thing is not really my cup of tea at this point. But let's jump into the commodities for Conwall here. So really quick, you wanted to take a look at nat gas. Right. So things are still getting messy here on nat gas, right? The near-term levels that we mapped out yesterday, I'm not sure if it was the day before. Yeah, I would just treat this as a range right now. Look, you have the 100-day moving average. Forget the 50 and all that. You have the 100-day moving average right here, which has been a clear pivot in price just in near-term price. Just in near-term. This is a 4-hour chart. And then you have the monthly open and the weekly open. That's all I would be using right now, to be honest with you. I think you could see another move back into 32.40 or so, but largely speaking, you know, any rally here, I think would still be treated as a relief, just because you are probing below this median line. And if this holds as resistance, break, zoom, retest, move lower is what I'd be looking at. Does that make sense? So 130, or excuse me, 324 resistance, Conwall, key resistance. As far as nat gas is concerned, I would be cautious of any shorts beyond the 3 handle, basically. 294 is a 618 retracement, and that converges on major slope support. It's actually at 293.3, but let's just call it 294 to account for slope. Big region. As far as the copper trade, was it? Copper looks like this. And then we'll look at silver, which is beautiful. It's still holding below resistance. You definitely want to keep a look at silver. I was looking at copper earlier for you today. This is what copper looks like. The high that we made today was the exact 618 retracement of the decline. And, okay, forget that it was last week's open, the upper median line parallel for a real near-term slope. So I do think you risk a little bit of a pullback from here. I basically want to stay constructive while above the lower parallel. Let's call it 265 near term. Ultimately, a move back into 270, I think you'd start to sell again. 271 to be exact. You'd start to sell again. Remember that if we're working under the assumption that this is a larger high that is going to correct lower first, we really should stay below the high day close, and that's basically 271. This is the high day close for the year, by the way, thus far. Comes in at 270 exactly. Excuse me, 271, right on the mark. And don't forget, longer term, 271 was the measured objective consolidation break target. Still what's holding is resistance. Okay, a break of the lows, you're looking for 259 on the broader picture here for copper. As far as silver, this is the one I like best. To be quite frank with you, Conwall, I think because you're coming into a level of invalidation that you're going to know pretty quick if you're wrong or not, and you're coming into the top of that resistance range right now. That's defined by the 200-day moving average, right under. I think it's 1788 is what I wrote. Actually, we highlighted the silver update on Monday. Here's what silver looked like. We're talking about this key region of resistance, and that's exactly what you're approaching right now. So I'm not interested in any long exposure, even on an intraday approach. I am interested in looking for signs of exhaustion, and I think you're getting that now. Watch how this materializes, but you're getting divergence as price action makes new highs. Bring it into an hourly chart. We'll see how this candle closes here. But again, price action getting tired into the resistance. Nothing yet here on the 30. But you guys get the picture. This is a big, big region. Now, in the event we move higher through 1788, and specifically on a closed basis, there's nothing of significance, in my humble opinion, until you get up into 1834, 1835. Oops. But looking for exhaustion somewhere here. Keep in mind those parallels off the highs, really clean. So you're short from 1777 with a stop at 1791. Okay, so the stop at 1791 is cutting it close. You know what I mean? 1788 is what I have marked in red there, as you can see in the chart, as like, yikes, watch out. So you're cutting it pretty close. The 200-day moving average is there, Conwall, but I would be looking for the target you have as your limit, as your stop. That's where I'd be looking for actually some entries. Just keep that in mind. Again, I don't want to encourage you to push out your stop or anything necessarily, but that's where I'd be looking for possible exhaustion. Okay. Remember, you never want to take a firm stance on this until we get the turn, at least in near-term price, to suggest that indeed we are sort of capping out the advance. Okay, any questions? Oh, well, I'm out of Kiwi at break even, so here's the advance. Initial 73.27. Again, bullish or bearish invalidation 73.52. So this thing, you know, as frustrating as it is, I want to see a resolution to this thing finally. Dollar yen. Making a move on the lows. So here's Kiwi. Here's dollar yen doing nothing. Here's euro stretching higher. Again, don't chase the euro higher from here. I think, like I said, you get a near-term pullback that you can get into the U.S. Open, maybe near 106.70 or so. I'm looking ultimately, like I said, for a stretch into 107. Big region near term. Nice pivot in price. But ultimately, that's the stretch higher you're looking for into U.S. trade today. All right. Are we looking at gold today? Sarub, I don't really have anything on gold. It's from a trading standpoint, again, all I can do is keep highlighting resistance, and every time I do that, guys, it just plows through. So I'll give you the targets. If you're holding long positions, I haven't been able to initiate any type of long. There hasn't been any pullbacks. I don't even know what to. It's so frustrating. You draw these really sharp near-term channels. You're like, well, it's not going to stay in this slope. Typically, markets don't hold these real sharp ascending channels for too long. But every pullback, look, it's been so brief. Boom, gone. If you blink, boom, gone. It's the only opportunity you get. Now, we're completing a 1618 extension off the lows here, so this is your first major Fibonacci level of significance on the upside as resistance. So possibly get some divergence here. You are seeing, or possibly get a pullback here. You are seeing some divergence in price action. That being said, it's been a ripperoo. You know what I mean? I still think at 1248, 1250 is what we talked about as resistance on the longer term. That's a longer dated 50% retracement from the entire decline off last year's high. And a longer dated median line also comes in here as well. But, if you put a gun to my head near term, I'm looking for shorts. I'm looking for exhaustion into these highs. It's pretty, yeah. Sarub, it's same as yesterday. Yep. Same with the dollar, right? I'm looking for exhaustion into a new high in the dollar. I mean, that could have been it. But a pull, we'll see. Question, Sarub, on gold. Okay. You're more than welcome. We'll go ahead and wrap it up here. Guys, quick reminder, Jamie's up with midweek strategy webinar at 12 p.m. Eastern here in New York, so do keep in mind he will be on tap just a few hours to go over some of the longer-term setup, larger implications for the swing trades that we've been taking over on that side of the service. And I will see you guys bright and early tomorrow morning. Till then, best of luck trading, and I'll see you then. Cheers.